So we're back here. We're going to finish up the presentation here with the business plan for traders. One thing, one interesting story I remember about a guy in, hey, Sarah, the thing about the psychology stuff for traders is that the only people who really know that are the people who have actually been trading. So, that stuff is all, that's all stuff that I went through. It's all stuff that, any trader that's been around for a while has gone through. And, once you figure out how it works against you, then you're good to go. Yeah, I totally agree. If somebody masters the psychology part of it and doesn't know anything about the setups, I still think they'll hold their own. But when you can master the psychology and then also have some profitable setups, you're going to be in the top 10% of all traders. It definitely is a combination of the two. A large combination is your attitude and your trading methodology. Yeah, that's a huge part of it, Sarah. It's like, you'll sit there and take a loss, and it's so easy to get frustrated because as traders, we spend so much time in front of the computers, and there's so much, we got so much writing on it, especially if you're trading and you're trying to you want to start trading so you don't have to work at a job anymore that you don't like. So every time you have a losing trade, it can be really frustrating because that's like, oh God, it's not gonna, my dream's not gonna work out. And once a trader can figure out that that's just part of the deal, then they can take the next step and become a successful and profitable trader. Exactly, Justin. Yeah. Zen and the Art of Poker. Yeah, I do like the Disciplined Trader and Trading in the Zone are really good. But yeah, this is a critical part that a lot of people just don't understand. And believe me, if you're talking about this with somebody who's not a trader, they will never, never, never understand. So you've got to talk about this with other traders. And it's funny too, because it's like, as a somebody will ask me like, how'd you do today? And it's like, oh, today wasn't too bad. I only lost $3,000. And they're like, what do you mean that's not bad? And it's like, I'm like, well, I stuck to my game plan, and I had 2 losers and 1 winner, and
could have been much worse. Could have been $65,000.
Right. And people that aren't traders just don't get that. To them, that's that's a losing day. You lost, and it's like, that's part of trading. Is you're not going to win every day, but obviously you want your winning days to be more frequent than your losing days. That's a good answer. I'm losing less. Yeah, Justin, I don't either. Because what happens is somebody finds out you're trading, they're just like, basically if the stock market's gone down, they're like, oh, it's been tough, hasn't it? It's like, they just don't understand that it does not matter if the stock market's going up or if it's going down. Yeah, no, I agree too. I think that as a trader, you just focus on your trades, and then you just, when you walk out of your trading room, you just leave it there. You go do other stuff. What I like to do is go try to, go to the gym, or just go get out of the office and do something physical or something, reading, go watch a movie, just get totally detached from trading. Oh yeah, don't worry. Everybody who's a trader has people in their family that think they're nuts. The good thing is, it's one of the reasons we do our trading room, is that we can actually have people in the room who understand what's going on. We brought like family in to show them what we do, and they just sit there and go, "You guys are nuts." They just don't get it, and they're like, "Oh, it's easy," and they'll just sit there and they'll do a trade and they make money, and they're like, "See, God, I should be doing this. You should hire me." And no. It's like, yeah, we'll call you. Right. Yeah, it's pretty amazing. It is important to find some traders that you like, that you can actually bounce some ideas and stuff like that off of. And unfortunately, most of the time, you're not going to find anybody that's like right next door to you or anything like that. You kind of have to, traders. There's not that many good traders out there, and
you may not find one in your state.
Yeah, you may not find one in your state. You gotta. It's hard to find somebody who's a good trader. But once you find someone like that, you can just have someone to bounce ideas off of and stuff like that, and it's nice. All right, so why don't we do this? I want to go. This is the last section, and this basically kind of ties everything together. This ties together, you've got to know how to read the market. You need to have some trade setups. You need to know psychologically, if the market's screwing with your head or not, and if it is, how to fix it. But finally, if you don't approach trading with a business plan, it's not going to work. If you just show up every day and you don't really have a game plan as to what's going to happen if you lose money or make money or anything like that, you're really not going to be a trader very long. I mean, you may be able to do it for 6 months or so, but you need a plan. And when you put together a business plan, it basically sets you up in a state to do this for a living, which is pretty much the goal of everybody who's trading. Me personally, and what I do is at the end of every year, I don't do a lot of trading. In fact, I do no trading pretty much the last 2 weeks of December and the first week of January. That's kind of when I take my big trips. This past year, my wife and I spent 3 weeks in London, Paris, and Italy, or Rome, and Florence during that time. And that's not a great time to go to Europe. It's kind of cold, but it's fun. I mean, you can go into museums and it's not crowded. But that's when I just get away from the markets and spend some time kind of scribbling out my trading plan for the next year. And this is basically my plan for 2004. And in this December, I'll start working on my plan for 2005. So I just want to share it with you. And you guys feel free to, you can basically take this entire template and copy it for yourself and create a trading plan for yourself, or you can take parts of it that you like and make one for yourself. But I just want to share with you what I do, and hopefully this will help you in anything that you want to do in terms of putting together a business plan. So here's the first thing I do, and this is exactly what I did when I sat down in December 2004. I sat down and said, all right, why am I going to trade again in December 2003? Why am I going to trade again in 2004? I mean, trading can be a stressful occupation. It can be kind of a very solitary occupation. But I want to sit there and say, all right, why do I want to do this again in 2004? And these are the bullet points that I listed. Financial rewards. The freedom to work from anywhere. If I want to trade in Boston, I can. If I want to move to Florida, if I want to go to Paris or wherever and move, I can pretty much do this from anywhere in the world that has a decent internet connection. And I like that. I like being able to kind of do that. Freedom to choose who I want to work with. I'm not stuck at a company where I've got to work with some guy that I have nothing in common with and I don't want to be around. In trading, I can sit there and choose partners and choose trading guys to work with that I like and respect, and basically have the same philosophy, which is why basically Hubert and I work together. St. Thomas sounds like it'd be a good place, doesn't it? I actually think the best, my goal for, I'm not sure if I'm going to be able to pull it off next year, but my goal in the next year or two is I want to spend 6 months in Boston and then like 6 months somewhere else, or typically, more exactly, is winter somewhere else. Because I really like Boston and the Boston area, but I don't like the winter. So I want to figure out and actually set up trading offices in multiple locations. That's kind of my tentative game plan for 2005, 2006. So that I can go and say, all right, let's go to St. Thomas for 3 months. I go there, my computers are already there, they're set up, I trade. Then we go to Boston for 5 months. I go there, my computers are already set up, I trade, so on and so on. So that's kind of my next stage of goals. Freedom to dictate my own schedule. Well, yeah, my schedule is largely dictated by the market, but I don't have to trade every day. And so if I feel like taking a week off in August, I will. I don't have to get approval from anyone. Continuing mental growth and new challenges. I find that every trading day is different. Every day presents new challenges, and I enjoy that. And finally, bottom line is, I would miss it if I stopped. If I stopped trading and I started doing something else, I know that I would just start getting an itch. I'd feel less fulfilled. Trading to me is just a very important part of my life. And I heard another trader say this, and I think it's true for me too, that if I wasn't trading, there'd be a part of me that would just probably fizzle out and die. I mean, it's something that I really love doing. So those are all good reasons to do it. Now, the other thing I also do, and Hubert and I do this, is that we run this website and we run this trading room, and this is obviously all tied into our trading. And part of our business plans for trading are, do we want to continue doing the website and the trading room for the next year? And honestly, it's a lot of work. I mean, doing the seminars and stuff like that can be exhausting. But the upside is we meet a lot of interesting people. It's a nice, it's kind of a nice. It helps keep us focused on trading, and so far, I mean, we enjoy it, and the rewards outweigh the frustrations, and we want to keep doing it. So part of my game plan every year is to sit there and go, all right, this year I want to continue, doing this as well, and until that becomes, at some point that'll become a no, and I'll just focus on trading, and obviously have a lot more, time and stuff like that in my own life. It is fun though. I mean, you do meet. I mean, traders are very interesting people, and through doing this, you meet a lot of great people, and that's kind of fun. All right. So the second thing I do is I decide what markets I'm going to trade. So for 2004, and I try to do this in order of the markets that I trade. Although sometimes this will fluctuate. So for 2004, it was going to be mini-sized Dow as the primary market that I traded, closely behind the E-mini S&Ps, the Nasdaq, the Russell, the 30-year bonds, the euro currency, grains, and then single stock futures. Okay, and that's what all I'm doing here is I'm just picking the markets that I want to focus on. So why these markets? I'm going to go through and list. I want to sit there and say, all right, why am I focusing on these markets? For the mini-sized Dow, this is my first choice for intraday trading. So on my intraday trades, I'm going to be focusing on pivots, gaps, and squeezes. This contract offers a better spread than the other mini contracts, and it's very easy to get a handle on the Dow by watching the 30 Dow stocks on an auto sorting list. So these are the reasons why this is my market of choice, and I'm going to be focusing on intraday trading for the Dow. Then I'll go through the S&Ps. On the S&Ps, I'm going to be using these as intraday plays. I'm going to focus on tick fades and moving average crossovers and swing plays. Now this is kind of important. So what happens here if if I'm in say I'm in a gap play, or say I'm in a long squeeze play, and the squeeze is still valid, but we get 1,000 tick reading. Well, I can still stay in the mini Dow, trade long, but then I can short the S&Ps on a tick trade. So in a situation like that, I can sit there and play the long squeeze out until it's done, and then also take advantage of another setup like that. And although the two positions offset each other, the market may rally a little bit more, and then I can exit my squeeze position, and then I'm already positioned for the tick fade. So that's a possibility. I don't do that a lot, but it is a possibility, and you can do that by having multiple markets to choose from. The Nasdaq, I do not trade the Nasdaq that much, but what I will do is that if this index is the strongest or the weakest of the day, I will focus on that market. So if the Nasdaq is by far the strongest index of the day, and I see some long setups, I'll go into the Nasdaqs and do the longs. And vice versa. If it's the weakest index of the day and there's a short setup, then I'll go into the Nasdaq because that's going to have the biggest run to the downside. The Russell I will actually use. I go through periods where I'll trade the Russell more often, and sometimes when I don't. I do like the Russell more for swing plays as opposed to intraday trades because I do so much trading on the Dow and the S&P. But I also like the Russell as a leading indicator. Okay, and we talked about this earlier. LI, leading indicator. So when the Russell's breaking out, I will go ahead and buy the Dow or buy the S&Ps, and that's one of the main reasons I use the Russell and watch it. The bonds. Basically, it's like why the bonds. Basically, for bonds, all I'm going to be doing are the doldrums play that I showed you guys earlier. Okay, so it's important to know this because if you're going to trade the bonds, you want to know why you're trading the bonds. I'm not going to be trading the bonds for gap plays. I'm not going to be swing trading the bonds. I'm not going to be doing pivot plays on the bonds, but I am going to do the doldrums play on the bonds from 12 to 2. Okay, so I have a business plan for the bonds, and that's what I'm going to follow with it for the entire year. On the euro, same thing. I've got a business plan for the euro. I'm going to do box plays when the stock market is quiet, so it gives me an alternate market to trade from. For grains, okay, I'm going to focus on the grains for swing plays. That means I'm not going to be intraday trading soybeans or intraday trading corn or wheat. I want to set these up for swing plays. Now, why do I trade grains? Well, part of it is I have a farm in Nebraska that I own. My grandparents retired from farming. They had a 1,000-acre farm in Nebraska, and I went ahead just using my trading profits and bought it from them because they were going to sell it to a stranger, and I thought it'd be kind of a fun way to keep it in the family. And it's been nice. I mean, it doesn't really, basically it makes enough money to pay for itself, but it kind of keeps me interested in the grain markets. And so since I'm interested in the grain markets and what's going on, I'll trade them. And that's just kind of why I do that. Because we didn't really talk about grains during the seminar, that's just something I do. And I don't do it excessively. I'll just have, positions here and there on a swing basis based on what's happening in the grain markets. Finally, single stock futures was something I started trading more of this year. And again, I just use them for swing plays. So by knowing this, I'll know right away that, if something's happening during the day, if soybeans are taking off, I'm not going to intraday trade soybeans. I'm not going to intraday trade single stock futures because I've got a plan for each market that I'm looking at. A gentleman farmer. Yeah, I'm definitely not out there hoeing the fields. I just rent out the land. But it's great. This place is in southwest Nebraska. The closest airport is 4 hours away. So if you really want to get away from it all, it's a good place to go. So a few notes here on the markets to trade. The parameters are never to be changed once a trade is entered. Okay? Once I get into an intraday trade, I'm not going to suddenly think that it should be a swing trade. All right? If I get into a pivot play and for some reason I go, wow, I'm going to make this a swing trade, I just ignore that because that is not part of my business plan. If I get into a squeeze play, I get out of it on a squeeze play. I don't turn it into something else. Every parameter is determined before a trade is entered. For intraday trading, I do not use all 4 stock indexes at once. That means that if I'm going long, because the markets are going higher because I get a squeeze play, I'm not going to go long the Dow, the S&P, the NASDAQ, and the Russell. I'm going to go long one of those. So I'm not going long 4 indexes. I'm just focusing on one. Okay, so that helps keep me focused on not to get too excited and buy everything in sight when things are going higher. Okay, the third thing I do now, account size. How much money am I going to trade? Now, for my own account, I have trading programs for my own account and then trading programs for managed accounts. So basically what I have to do is I have to take that into consideration. This will be easier for you guys because you can sit there and go, okay, I've got a $10,000 account to trade, or I've got a $50,000 account to trade, or I've got a $500,000 account to trade. So what you want to do, for me, what I do is I have to base it on multiples of $100,000 because I'll have different amounts of money coming in or going out throughout the year, and so I have to base my contracts on the amount of money that I'm trading plus the amount of money that I'm currently managing. And so I have to do it a little bit different. But what I do, and we're going to go through and we'll talk about that in a second. But here's some of the things that I do. At the end of each quarter, I take out 50% of the profits. Okay? Oops, I didn't draw that well. So part of my business plan is that at the end of a quarter, any profits that I have, I'm going to take out half. All right? Why do I do that? Because that is the best way to protect any profits that I have. Because what happens if the next quarter is a down quarter? I will have protected some of my profits by taking them out on the previous quarter. So if you've got $100,000 and you make $20,000 the previous quarter, great. Take out $10,000 and stick it in a money market fund. Preserve your profits. I like doing this too because it's a reminder that the numbers on the screen that you're watching are real, okay, and they represent real money. It's not like it's easy sometimes if you're just looking at numbers on the screen. It's just like a video game. I actually like having the broker cut me a check. You get a check in the mail, and it basically shows, hey, here's your profits for that quarter, and you really realize that you're doing this for a living, and you're doing this with a specific game plan in mind. Question: within your personal trading, what legal entity are you utilizing? I use 2, Scott. I use an LLC and then an S corp. And I think LLC is probably the easiest way to go. You can go sole proprietor, but if you're willing to spend $400 to form an LLC, and you can form an LLC with yourself, there's a couple of business advantages to that in terms of tax write-offs, because basically you can get yourself a credit card for the LLC, and then just when you go out to the grocery store or stuff like that, basically you just anything that can be construed as a business expense, you just start using that. So that's the way I like to do it. There's nothing wrong with doing it in your personal account, but there are some advantages if you're familiar with stuff like that to doing an LLC. Yeah, exactly. And if you guys have other, that's a good question, because that's not something that we really talk about, but that's a good question to ask, because in my experience I've found that there definitely are advantages. It's kind of a little pain to go through all the paperwork and set it up, but it's really not that big of a deal, and you can do it pretty cheap. Yeah, just go to the Secretary of State website, or there's a group called the Company Corporation. You just send them a check and they'll set it up for you for like a couple $100 and do all the paperwork for you and stuff like that. Yeah, and Sarah's right. I mean, everyone in this room is going to have a different situation. So it is something that if you're not sure, and if you have an attorney, just ask them. And the attorney won't really know anything about trading, so you just need to look at it from a business point of view. What would be the best thing? Okay. Yeah, exactly. So, and the reason I like to good idea, Sarah. The reason I like to do that and have the profit sent out each quarter, or half the profit sent out, is that it reminds me that I'm really running a business, and it keeps me motivated to stick to my parameters. This is very important, and this is part of my business plan. Okay, I will never add money to my account to meet a margin call or just to refill the account back to my starting point. Now, I've never really had a margin call because of the way I don't trade with that much leverage. But if you start off with $100,000 and then you get it knocked down to 50, and then you decide to add 50 more in, and that's just a cycle. You need to reevaluate what you're doing. And part of my business plan is I just will not add money to it. So that's part of what you can reevaluate and determine how you should do that. Now, if you do start off, this is one thing that you can do, is if you're trying to figure out, and build up confidence in your own trading, it's okay to start with a small account. Maybe you start with $10,000 until you get a couple of consistent weeks under your belt. And then once that happens, go ahead and add $50,000 or whatever you want, because you've proven that you can make money. So it's okay to start small and then add money as you've proven to yourself that you can make money. And that's a very cheap way to learn how to do trading. Throw in a $10,000 account and destroy that account first. Don't destroy your $100,000 account. Okay, step 4. This is probably the most important part, because a lot of people get messed up on this. You need to determine the number of contracts to trade. Now, for me, I'm doing this per $100,000. For you, it would be whatever your account size is that you're trading. Okay. For me, what I'm doing is I hold it's kind of a pretty conservative approach. If I've got $100,000, I'm going to be trading 6 contracts. Okay. If you have $100,000, you can easily trade 20 to 40 contracts with a margin. But I have found that this is a combination of my own trading and trading other people's accounts, is that they don't really like a lot of volatility. So I've done a combination of that and found a happy medium. So if you have 3 20-point losers trading 6 contracts of the Dow on a $100,000 account, you can definitely get up and survive to live another day. I mean, that's not too big of a deal. And the same thing on the S&Ps, 6 contracts, NASDAQ, 6 contracts. On the Russell, I cut that in half to 3 because the Russell's a lot more volatile. On the bonds, I'll do 3 contracts, and on the Euro, I'll do 3 contracts. Now for grains, I'll do 3, and then for single stock futures, I just cut it out like this. If the stock's between $10 and $30, I'll do 7 contracts. Between $40 and $60, I'll do 5 contracts. And between $70 and $100, I'll do 3 contracts. Okay? Now these are full positions. So what'll happen is if I'm going in and say it's just $100,000, I'll go in with 6 contracts, and then if I'm covering half, I'm selling 3. Now if I'm trading like $1 million, then it's going in with 60 contracts, I'm selling half, I'm covering 30. It's the same concept no matter how much money you're trading. All right? And you need to determine risk-reward levels for yourself. With my own accounts, I'll get a little bit more aggressive because you can. I was talking about the pivot strategy where I'll trade like one contract for every $10,000 to $12,000 in my account. You just need to find what's comfortable with you. And what I find is err on the side of conservative. If you're sitting there, if you're trying to decide, all right, if I've got $100,000, how many contracts should I trade? And you're trying to decide between a range of, say, 5 and 10, err on the side of being too conservative to start. So pick 5. So find the range that you're comfortable with. Go with the conservative end of the range. As you are able to gain confidence in your skills in making money, you can up that number. The other thing that you need to remember too is what are the maximum positions that I want to utilize for my trading. Intraday per $100,000, I don't want to be exposed to more than 12 contracts. So that means if I'm long 6 Dow contracts, and I'm also long 6 S&P contracts, and now I see a bond trade shaping up, I can't take the bond trade because I've already got 12 contracts. So I try to set it up where I'm only in one index at a time, so that frees me up to also do a euro play or a bond play. And that's just a way to protect yourself from being overexposed in the markets. Okay, execution methods. Now, I put this in here to scale in 222. This is for gap plays. I found at the beginning of the year what I was doing is I'd scale in, I'd get in 2, I'd get in 2, I'd get in 2 until I'd get my full-size position. It really depends more on the plays, and these gap plays have been more refined, and this is going to be updated for next year. Basically what I do now is I do a lot more work on the pre-market volume. So what I do now is that if there's low pre-market volume, I'm going in with all 6 contracts at once per $100,000. If it's moderate, then I'm going in with 2/3 size, which is 4 contracts. And then if it's high volume, I'm not taking the trade. So that's how that's been modified through the year. Pivot plays, I'm basically in all at once, and then I'll just scale out. Now here at the beginning of the year, I was scaling out a third, a third, a third. I've changed that to scale out a half and a half. So that's one modification I've made during the year, which I'll include in my 2005 plan. Okay? So the idea here, though, is that you figure out the plays that you're going to follow, and Hubert and I have talked about a lot of different plays here, and you're going to see how they work tomorrow. And that if you're going to pick 3 plays, say the gaps, the pivots, and the squeezes, then that's great. You pick what markets you're going to do them on, and how many contracts to trade, and how much exposure you want at any one time, and you're going to put that in your trading plan. Now, here's kind of the nitty-gritty and the meat of the plan. This is how you save yourself. You got to have a plan for drawdowns. So you got to have a plan for drawdowns. If I'm down 12% for the month, okay, what I do is I cut my position size in half for the rest of the month. So if I'm down 12% and I've been trading 6 contracts per $100,000, now I'm going to start trading 3 contracts per $100,000. Okay, obviously something's not working right that month, and I'm not going to exacerbate the situation by doubling up. In fact, I'm going to cut my trading in half. If it gets to the point where I'm down 16% for the month, I stop trading for the rest of the month. All right, something's happening obviously I'm not in sync with the markets. I just take the rest of the month off and clear my head. It hasn't happened very often, but it does happen, and that's okay. Typically, what I found was what happens is that for me in the day trading is more of a bread and butter trading. It's steadier trading. You don't really have that many drawdowns. It's in the swing trading is where I'll have if I'm going to have a really good month or a really good year, like triple digits, it's because of the swing trading. I had some great positions in some swing trades that really took off. If I get some really decent drawdowns, it's also because of the swing trading. So that's something that you can evaluate yourself too and say, all right, do I want to mess around with swing trading or just focus on the day trading? And I try to I keep my swing trading and my day trading separate so I can track those. So what could happen on something like this is that, for example, my swing trading accounts are down 16%, so I stop swing trading for the rest of the month. But my day trading accounts are doing fine, so I continue day trading for the rest of the month. If I hit a 30% total drawdown, then it's time to take a month off, a full month off from trading. Okay? So that's kind of my drawdown rules. And what happens is this saves yourself, this just saves yourself from, blowing out an account. Oh, Sarah, yeah, I didn't talk. I'll back up here real quick. On the tick fade. On the tick fade, I actually do, that's what I do. I still like to do this. One of the things that happens on the tick fade is a lot of times I actually don't even get in with a full position. What I'll do is I'll scale in with 2 lots. If we get 1,000 ticks, I'll throw on a third lot there. And then if we get to 1,100 ticks, I'll throw on another third lot. And then 1,200 ticks, I'll throw on another third lot. And that'll get me a full position. Most of the time what happens is I end up only getting one, picking up the first third, and maybe the second third. That's something I'm looking at this year. I maybe scale in for 2005, do half and half. And in fact, that's what I'm leaning towards more, is more and more the concept of is just getting into a trade and then scaling out. For pivots, I'm all in. For gaps now, I'm all in. For squeezes, I'm all in. And that seems to work more consistently than trying to scale in and scale out. And so this will happen as I go through the year. I'll kind of make notes as to what's working and what's not and tweak it, and then I'll put that on my next trading plan. Okay? Page 256. For overnights and swing trades, I've got a hard stop, 2% loss in equity. So if I've got a $100,000 account, I've got a swing trade on, I'm only willing to lose $2,000 on that trade. Daily max drawdown, and this is good for day trading. You just got to figure out what is the maximum amount that you want to lose per day. And for me, it's 2%. So on a $100,000 account, if I'm down on my first couple of trades and I'm all of a sudden down $2,000, then I'm pretty much done for the day. What I will do is I will allow myself one more trade within my parameters, because what happens is that if my first 2 trades are losers and I get to that by 12 noon, I'm done until the last hour. In the last hour, I'll take another trade, and I'm only going to take one trade. If it's a loser, I'm done. If it's a winner, I'm done. The other thing that I'll do is if for some reason I don't follow my rules, I have a punishment system in place. And what's the best punishment for a trader? Don't let them trade. And if for some reason I don't follow my rules and I'm down $5,000 on the day because of some stupid thing I did, like removed a stop or doubled up on a position, that's great. Then the next day I don't trade. I haven't had to do that to myself in a long time, but I used to. When I finally started enforcing that, it really helped me stick to my rule. And that's what's good about having a trading partner, because that's what Hubert and I'll do to each other. It's like, hey man, how'd your trading go today? Oh, you did that? That's nice. So you're not trading tomorrow, right? Or, guess you're going to be using this tomorrow, right? It's like, yeah, okay. And it's important to be really open and honest with each other. Otherwise, you're not going to be able to improve. Now, let's talk about something that's a little more fun. Number 7, page 257. What about your rules for profits? What I like to find is that you want to figure out kind of what your average win is. And if you realize if you're making $500 a day, that doesn't seem like maybe a lot. So for some of you it's going to seem like a lot, and for some others it's going to be like, hey, that's not very much. Well, $500 a day is $120,000 a year. I mean, it adds up pretty quick. So you can find that staying consistent and hitting consistent base hits will really pay off. Can pay off by the time the end of the year comes around. I found for me personally, in reviewing my trades, that Tuesday, Wednesday, and Thursday are my best trading days. Okay? On Tuesday, Wednesday, and Thursday, I really focus on hitting my daily profit targets. And I found that if I'm going to have a really good week, it's because on Tuesday, Wednesday, or Thursday, I really hit it hard and make a lot of winning trades. And my reward for this is that if I make 10% for the week, I'm going to take Monday off. I really like 3-day weekends, and if I can have, take Monday off and be able to come back on Tuesday and just see what the markets did on Monday, that generally makes me an even better trader on Tuesday. So that's kind of a personal reward for me. If I get to a point where I'm up 20% for the month, I'll take the rest of the month off. I found that that's actually very hard to do because I like trading so much. But what I'll do is if I'm up 20% on swing trading, I'll stop my swing trading for the month and just focus on some of the kind of the bread and butter trades for trading, or lighten up. So that's something that you kind of have to figure out for yourself. But what I like to do is when I do that is there's been some times this year we went and spent a week in Jamaica. Went and did a couple of trips like that, and it's just basically a reward for those times when the trading was going really well. Okay, number 8, rating your performance. What I like to do, and I think this is pretty important, is basically writing down the trades that I take. And I'll just sit there with a notebook, and as I take a trade, I'll just sit there and write down why I took it. Okay, this is a pivot trade, or this is a squeeze trade. And then I'll track the results. I've stopped out, sold half at this, sold half at this. And then what I do, too, is if for some reason I change the parameters and say, I jumped out too soon, or I tightened my stop too fast, I'll write that down and just kind of, jot down why. I'm not trying to rewrite War and Peace. I just jot a few sentences down as to what I'm doing. And what I also like to do is track all my trades in a spreadsheet. So I can sit there and I can look over the last week and say, wow, I did 3 gap plays and they were all winners. I did 7 squeeze plays and 4 of them were winners and 3 of them were losers. And I did 4 pivot plays and they were all losers. And I could sit there and see if there's a pattern in that, because if at some point, my pivot plays aren't working, and my gap plays are all working, well, guess what? I'm going to focus more energy on what's working, and I'll focus more energy on gap plays and not take so many pivot plays. And by following the parameters exactly, you can actually measure how the trades are working, as opposed to if you're doing like impulsive trades or you're kind of making up your own parameters as you go along, you can't measure that. By sticking to the parameters and getting into the trade, you can actually measure how the trade's doing and then figure out your win-loss ratio. So, wow, every time I do a gap play with these parameters, I'm winning 87% of the time, or whatever it is. So that makes you, especially at the end of the month, you can then just continue focusing and putting more emphasis on what works. One thing I found, too, is that, as I told you guys before, one of the weaknesses that I identified in my own trading was just being an impulsive trader. It's like, oh, God, market's going to explode here. I just got to get in. If I succumb to that notion, I'll write that down, and I'll track how did my impulse trade do. And not surprisingly, I always found when I track this, anytime I do an impulse trade, those are my lowest probability trades. And after you see that on paper, you just realize that, okay, I'm just going to stop doing those. Section 9 here, basically just tracking your daily ups and downs. The goal is obviously to get consistent profits and smaller drawdowns, and you can improve on that year after year after year. Things that you want to track, how many days did you start off losing and end up on the plus side? I found for me personally that except for the gap plays, during the first hour, generally I would find that my losing trades to winning trades were like 50-50, but after the first hour, my winning trades went up 75-25. So, except for the gap play, generally for the first hour, I'm not going to do very much, because I know from tracking my performance, my first hour trades, aren't that sharp, except for the gap plays. So that's stuff that you learn about when you're doing this stuff. I also like to track, how many days did I start off really strong and give it all back, and why? See if there's any reasons for that. And part of what I found is mentally, is that, if I started off with a strong cushion, I could sit there and think, oh, all right, I could take bigger risks because I had more, house money to play with. So, my answer to that was I just don't even watch. I've got it set up now where I don't even watch my P&L. I just my broker takes the trades for me, and I don't even watch the P&L because that way I can just focus on the trade setups. People I've told this to, they've put some like a little business card, taped it to their computer screen to cover up their P&L, and then that way they just focus on the trades, and they don't have that whole P&L thing messing with their heads. I found it actually can help a lot of traders. You just don't, if you sit there and trade at the P&L, it's like when you're up, you're going to have a different mindset, and if you're down, you're going to have a different mindset. You cover it up and just focus on the trades. Yeah, it's surprising. I mean, I found that it's very helpful, and that's something I do today. I mean, I just think it's the way I've got it set up now because of all the broker assist trading that we're doing. It's easier, but that's a way to do it for stuff that you're executing on your own too, because that way you just, again, the whole idea is to focus on the setups, and if you're focusing on the P&L, suddenly you're not focusing on the setups any longer. Also, you want to evaluate, what's going on today in terms of interruptions, phone calls, family stuff. If you've got a wife that's pregnant and it's due to deliver in the next couple of weeks, well, guess what? You probably shouldn't be trading very heavily. If you've got a sick parent in the hospital, that's not a time to trade very heavily. That stuff takes a very heavy subconscious emotional burden on you, and it's not going to work out if something, it's harder to trade in those situations. So you just want to be aware of that. Just remember that, for me, early on I noticed that if I was doing really well, then I'd try to push it and try to make even bigger gains, and that's when I'd get in trouble. So part of my journal is to sit there and go, okay, you had a really good week. Just be careful on Monday. Take Monday off. Don't get too crazy. And that's what I kind of work on like that. And that word on reducing the amount of those days, that should be work. We'll just change that in the next draft. Okay. The other part of my business plan is the office setup. I have basically what we call just kind of rented a condo that I use just for trading, and it's very close to where I live. I can walk to it, and in this office, I just set up the whole living room as a trading office, and I've got one computer with 4 monitors for TradeStation, one computer with 4 monitors for eSignal, one computer for execution. I've got a PC for email, internet, and instant messaging. I've got broadband access with phone line backups, and I've got landlines and cell phones. So, part of my business plan is my office setup and how much money I'm going to allocate towards computers and equipment and things like that. And in this case, it's a lot of times trading is nice because it's a very low overhead business, and I think to start out that you should just try to find the lowest overhead situation that you can. And if things pan out better, I found for me it's nice because the office is more private. I actually did have an office in what you call a normal building for a while, but then what would happen is you'd get solicitors coming by trying to sell you stuff. Other people in the building found out you're a trader, so they come in and look at the stock quotes and things like that, and of course that's just annoying. So for me this works out perfect. The other things that I look at too is to make sure that all my computers have battery backups. I want to be spending a lot of time sitting in my chair, so I want to make sure I've got a comfortable chair. Things like virus protection software and spyware protection software, I want to make sure that I've got that already. I talked earlier about commercial-free music. I like to listen to music in the background, and I hate commercials. Commercials, traffic, and mosquitoes are like my 3 pet peeves. So, I don't want to listen to any commercials, and I just don't do that during the day. And then no phone calls after 11 a.m. Eastern. If the phone's ringing, and luckily here at the office, I've got Priyanka here at the office and Terrence here at the office to kind of help out with phone calls and stuff like that. But I personally won't. If there's a phone call for me, they know, sorry, I'm not available. Now, if I'm in the room and somebody's got questions about trading, because I'm focusing on trading, I'll focus on, I'll answer questions about trading and stuff like that, because that's what I'm focused on. But I'm not going to get a phone call, from the insurance company asking about, do I want to up my coverage, or anything like that. I just, I will not take it. Now, here's a fun part, number 11. We spent a lot of time focusing on, what about potential mistakes and things like that. What about rewards? Well, one of my rewards is that if I make 60% for the year, I take the next 4 weeks off. That to me is a reward, and I like to. It's a nice incentive to kind of kick back and some time off. The other thing I wanted to do is take for 2004 is I wanted to spend 2 weeks in Europe and 1 week in the Bahamas. Well, this year I spent 2 weeks in Europe at the beginning of the year, actually 3 weeks, and then I did a week in Jamaica, which is kind of close to the Bahamas. There's still some time left, so we may still include that trip in too. The other thing I wanted to do is, since we're up here in Boston, is go up to Quebec, since I've never been up there, and so it's just different things like that. You need to add a reward system for yourself. The other thing I'm looking to do is upgrade my home theater system. I really like watching movies, so I wanted to get upgrade and get the bigger flat screen, get the surround sound, and all that kind of fun stuff. And then at the bottom, I just said buy more land. When I bought my grandparents' farm, it was about 400 acres, and then I've kind of bought, as the farms around it come up for sale, I'll just buy them. So I got one up, so it's up to about 1,000 now. And it's not like, I don't know why I buy it out there. It's just that's where it happened. That's where they happen to be. I've got like distant cousins out there that are familiar with the stuff, so it's just kind of a hobby. Now, here's the other thing that I like to do too. It's when you do have a really good week. What I find, if I have a really good week and I make 10% on my money, if you make 10% a week, that translates into an awesome annual profit. So you just want to make sure that you're staying in check. And what I do is I go out and I do things to tame my euphoria. So what I'll do is like go out and go play golf. I'm okay at golf, but it's a very humbling sport. I'm taking flying lessons to fly a little 4-seater Cessna plane. That's extremely humbling. I take Taekwondo and I work out with some black belts. It's kind of embarrassing because there's this girl in my class her name is Emily. She's like 15, and she's like a 3rd-degree black belt. And we'll sit there and spar, and every time she'll sit there and basically beat my ass. But it's kind of a humbling experience, and kind of keeps you humble and gets you back in the right frame of mind for the next trading day. Of course, if I met her on the street, I know I could take her. But in the doji, when you got to follow the rules, she's the master. I do like to leave the markets between 12 and 2 and take a break. Now, I will take the bond trades, but for the bond trades, you don't really have to sit there and stare at the market. You can put in your positions and just kind of leave. But I do like to take some time away from the market, because what will happen is most of your trading and most of my market focus is going to be from about 9 to 12, and then from 12 to 2, nothing's really happening. So if you can go out and take a mental break, then you're going to be refreshed and ready to go for the last 2 hours of the trading day, where the opportunities are going to set up. Another rule that I like to follow is after 12 noon on Fridays, I'm pretty much done. In looking at my own trading performance, after 12 noon on Fridays, it's like 50-50. Sometimes I make money, sometimes I lose money. So my thought is, why put myself through the aggravation? Just quit trading during those times. So that's part of my trading business plan. During options expiration, I try to cut back my trading in half and consider not trading at all. I focus heavily on the first two trading days. I focus heavily on the first 2 trading weeks of the month. I have found that I generally, in myself, maybe it's mentally, in my peak performance, it's always during the first 2 weeks of the month, and then the last 2 weeks of the month tend to slide back a little bit. So what I do is I just trade hot and heavy the first 2 weeks of the month, and then the last 2 weeks I kind of ease back, and I won't take as many trades, not trade much size, and just kind of ease back a little bit. And I think a lot of that has to do is just mental. The beginning of a month, you're fresh, you're ready to go, you're sharp, and trading can be pretty tiring, and as the month goes on, it just kind of wears you down. So I just started realizing that in my own approach, and when we've got a new month, I focus hot and heavy the first couple of weeks, and then I just pull it back a little bit. And then down here, I just said that for me, if I'm making $2,500 for every $100,000 that I'm trading by noon, I'll continue to trade until I have a losing trade. As soon as I have a losing trade, I'm done. If I have 2 or 3 more winning trades, great. But as soon as I have a losing trade, I'm done. I've made my money for the day, so I'm not going to risk grinding it down into zero. Okay, other things, part of my business plan for peak performance, I will not answer the phone or instant messages or emails between 9 and 11. I like to stay focused on the markets. I will not initiate trades or watch the markets during the overnight session. it just does not add anything to my own trading. I like to have time away from the markets. I could overnight trade the DAX or the Euro, but I choose not to. I just like to have a finite amount of time that I'm looking at the markets. There's plenty of opportunities from the 9:30 to 4:15 session in all markets, so there's really no reason to have to trade 24 hours. Yeah, Sarah, that was a slide that I had added in. I'm glad you pointed that out. Let's see, 25, 12 noon, 7. Yeah, this is something I actually had revised this a little bit, and I need to update that slide. But I basically revised it to say that if I got up to the $2,500 level, later in the year, what I did is that I will just keep taking trades until I have a losing trade. Because if I have a losing trade, I'm only going to lose, give back like $500 of that. So it's not going to take me down to zero. So if it looks like it's it's on a roll, I'll just keep trading. And sometimes I'll have 3 additional winning trades in a row and then a losing trade, and it turns out to be a decent day. And I found that was just a way to capitalize. If it's a strongly trending day and I'm really sharp and really focused, it keeps me in the game, and my money management stop is, all right, when you have a losing trade, you're done. And that was kind of a revision there. Here's some other things that I do every year, is I take the entire week off of Thanksgiving. There's no reason to trade. It's a good week to take off. Spend some time with your family, just eat some turkey and gain some weight. Part of my trading plan is that I take off the last 2 weeks of the year. Part of this has to do with the holidays, and part of this has to do with the markets are not very fun to trade the last 2 weeks of the year. They're very quiet, so it's a good time. I like to do something physical at least 4 times a week, whether it's like taekwondo or just going for a walk or running, doing some weights, water skiing, jogging. It just helps me stay, not only staying in shape, but kind of helps keep me mentally sharp. What I found too is that trading and vices don't do well together. I try to watch any intakes of caffeine, alcohol, and stuff like that. If you're finding that you got to drink 8 beers to go to bed at night, you might consider looking into that. Generally staying healthy with good eating habits, taking vitamins and stuff like that. All right, so that was the entire business plan, and that was the business plan. So if you guys have any questions on that, feel free. And what I'm going to do real quick is I'm just going to go through a couple of slides here on the conclusion, and then Hubert and I will stay here as long as you want if you have any questions or anything.
Have you got that Fort Lauderdale presentation? I've got some more examples of squeeze. That's all right. I can do it tomorrow after the close. I'll do it tomorrow after the close.
All right, so let's go through the conclusion here. Basically, just kind of like everything that Hubert and I talked about. I mean, trading the markets, what I personally find is it's the greatest job in the world. There's no bosses offering you contradictory instructions, and you don't have any employees to babysit for the most part. I've watched, thousands and thousands of people just kind of flock into the markets, and it's kind of like, like the lemmings heading to the cliff. And unfortunately, most of them just kind of follow the cliff and don't make it. But there's a certain percentage of them that do, and the percentage of them that do are the ones that go out and they get the right education and the right feedback to learn how to do this for a living. And part of this is just, you got to stay in the right frame of mind. You need to find the best market to trade for your personality. Okay, if you're a big S&P trader and you're not making any money on it, consider going to the Dow. It's a little bit more methodical market. If you find you can't make any money trading the stock indexes, then go to the bonds. The bonds are a different market, and they may be better suited for your personality. Okay, you need to find ways to stay on the path of least resistance. You need to know what to do when things go wrong, and you just need to focus on a handful of setups. And you only need 1 or 2 good setups, and you can do this for a living. There's a ton of information out there, and I found that information overload is probably the worst thing that you can do. Get into a professional state of mind and just focus on a couple of proven setups, and you're going to have the best of both worlds. You're going to have a couple of simple setups to focus on in order to block out all the noise, and you're going to have the right mindset with which to execute those trades, and that's all you need to make a living at this. The plays and methodologies that we've shared with you guys during this 2 days, they're going to keep a trader from second-guessing his or herself. It's going to keep a person on the path of least resistance, and it's going to keep your losses small while allowing your winners a chance to run. All right, so that's really all you need to do this for a living. Now, if you've got any questions, now obviously tomorrow we're going to be in the trading room all day, but if you have any questions, please feel free to email us. There's our emails, jcarter@tradethemarkets.com, hubert@tradethemarkets.com. The main office here where I work, that's the phone number for this. Hubert's giving you his cell number. And that's pretty much all you need to make a living at this. I mean, this is the greatest business in the world, so, I mean... That's funny. So, good luck with your trading and everything. So, let's go. We're going to stay here for any questions that you guys need. Thanks, guys. I mean, you guys were you guys were great because you very very attentive. Asked a lot of questions. This is how it's going to happen tomorrow. Okay. Now we've gone through the entire presentation. Now tomorrow, what we're going to do is the market opens at 9:30. We're planning on getting into the room about 8:30, 8:45, and we're going to start setting up. We're going to start looking at pre-market volume and start going through all that stuff. And so basically, what you want to do is you try to get into the room by 8:30, at least. Get your spot in there. And then basically, what we're going to do is we're just going to do the same drill. Everything that we've talked about over this weekend, you're going to see tomorrow. And we're going to start off. We're going to look at pre-market volume. Then we're going to look at the opening gap if there is one. Then we're going to start watching the radar screen and looking at the internals. Then we're going to start looking at the pivots and the scalper buys and sells and the squeezes. And we'll be doing that till 12 noon. Then we'll start looking at bond plays. And then the last 2 hours, we're going to go back and look at stock plays. And basically, you're going to see how all this ties together. Because even though this was a lot of information, it's actually really, really simple to use. The advantage that you guys are going to have over everybody else is that you're going to understand how it works. So when we're talking about, tick plays and squeeze plays and gaps plays, you're going to understand all the methods behind the madness. Because what will happen is that people in the room will ask questions, but we don't have time to answer everybody's questions about why we're doing stuff, which is why we do this seminar. Because people ask, well, how does the scalper buy and sell work? And it's like, well, look, we're in here calling out our trades. We don't have time to tell you this during market hours.
We'll give them a brief skip.
Yeah, real brief. Okay, so the same... Okay, so yeah, good question, guys. The password for tomorrow is the same, okay? You guys got in today with the password catfish. It's going to be the same password for tomorrow. So you guys will have that. Roger, that's a good question, and we'll go over that. We'll do that tomorrow. Sure, thanks. If it rises from 0.5 to 1.0 and the market is rallying, yes, that's bullish. Okay? And we'll do that, Roger. We'll point that out. We're going to be looking at the put call tomorrow and seeing what it's doing, and we'll tell you if it's bullish or bearish. Oh, yeah. Basically, you guys can get, if you guys are interested in the TradeStation indicators, if you have TradeStation and want those, you can get them 20% off the list price. Basically, they're almost $400 a piece. You can get all three for $9.91 off the website. You guys can get 25% off that $9.91 price. So I think it's like, whatever that is, $7.95 or something like that. If you guys want them. I mean, you can... if you know how to do it, if you know how to do the easy language, you can go in there and do it yourself. I mean, we don't mind. We'll give you the parameters. I personally don't like to program, so I'm just like, where do I get it? Also, too, I know we're going to be in the room tomorrow with all you guys. It's obviously going to be a little more hectic tomorrow because there's also going to be 200 other people in the room with us. But during the day, feel free to private message us. But feel free to type your questions in the room because what's going to happen is we're going to be paying attention to you guys and pretty much ignoring everybody else. Because I think we told you earlier we were kind of thinking about doing this in our own private room for the seminar attendees. But we do think that you'll get some valuable experience by being in the room with everybody else, because you'll see how that all ties in together too. Thanks, Roger. Yeah, it's kind of interesting because it's like we don't really do this very much. We're not like professional seminar givers or anything like that. We're just like, okay, here's what we do. And, we just want to share the information. So it's always, we always hope we try to communicate it in a way that people can understand. But it's just kind of, we just want to share what we do. Hubert, do you have any final words? Any words of wisdom?
I don't know about wisdom, no.
If you guys ever need to contact anybody for support, you can always call the 1-800 number to get a hold of John at the office. I posted my cell phone number. You guys can call that. I've got it on me day and night. One thing I ask is, don't be calling at like 11 or 12 at night, but any other time is good other than market hours. And just thanks for your kind comments. And if you guys got any questions, just reel them off there, and we'll try to take care of you. And hopefully the market will come to us tomorrow, and we will see how we do in the live situation for you guys.
Oops.
Okay, so tomorrow morning, you guys probably want to get in here about 8:30 in the morning. Obviously, the market doesn't open until 9:30, but what we're going to do is around 8:45, we're going to start talking about how the markets are setting up, look at any potential gaps, start talking what we're looking at and stuff like that. Oh, sorry, yeah, it is 20%. I think there was confusion on. There's also some type of discount if you want, I think it's like multiple months to the room, but for the trade station indicators, I believe it is the 20. Do you guys have any questions on tomorrow and how that's going to go? Because it's going to be, it'll be a zoo compared to how this is. Because there'll be like 250 people total in the room tomorrow. It'll be fun though. It's to me, I really like it because it's like, it's the combination of, you're going to have the charts. You're actually going to see our charts live. We're going to share them with you, like we shared the PowerPoint presentation. But then you're going to have the pit noise. Then you're going to have all the other traders in there, and it'll be fun. Oh, that's okay, Justin. We've actually got one of the guys in the room. Tomorrow you'll see him posting the market profile. He does that stuff for us. His name's Ali B. Yeah, and he uses CQG. Yeah, CQG. All right, I'm going to sign off from the. We're recording here still for the archives, so I'm going to turn this off for the archives, but we'll still stick around here if you guys have any questions, okay? So for everybody that's on the archives, this concludes the 2 days of presentation for the manual, and then starting tomorrow, we're going to have live trading all day Monday, and we're going to start in the live trading bright and early tomorrow morning on Monday. How do we get at the archives? Oh, Sarah, once we finish the archives, what's going to happen is we have to get them produced and everything, and then you guys can get them. All right. So for the archive folks, I'm going to turn this off, and the next section that you'll get will be the live trading that's going to start on Monday.